Welcome to the Finance Savvy. In today's video, we're diving into the latest market action. Artificial intelligence is changing everything, from the way we search the internet to how industries operate. But there's one big problem no one's talking about. AI is running out of electricity. As NVIDIA, Amazon, Microsoft, and Google continue building massive AI data centers, they're consuming staggering amounts of power. And the current grid simply can't keep up. That's where nuclear energy comes in. And in today's video, we'll explore how this AI-driven energy demand could lead to the biggest nuclear renaissance in decades, and which companies could benefit most. Part 1. The growing power crisis. AI's power demand is exploding. Data centers are expected to double their energy usage every 3 years, and by 2030, they could consume over 8% of global electricity. Every ChatGPT conversation, every AI-generated image, every data analysis, they all require massive GPUs powered around the clock. But renewable sources like solar and wind can't provide consistent 24/7 power. Coal and gas are falling out of favor due to emissions. That leaves one solution: nuclear power, the only zero-carbon, high-output energy source that runs day and night. Part 2. Why nuclear power is making a comeback. For years, nuclear energy had a bad reputation, high costs, long build times, and fear of meltdowns. But the new generation of reactors is safer, smaller, and faster to deploy. Governments around the world are reversing decades of policy. The US, UK, Japan, South Korea, and even parts of Europe are reviving nuclear programs. The Trump administration has announced billions in nuclear incentives, while private companies are investing heavily in small modular reactor technology, known as SMRs. AI might be the push nuclear energy has been waiting for. Part 3. The four-tier nuclear stack. Let's break down the 4 layers of the nuclear investment stack and the companies best positioned in each. Tier 1. Uranium mining and supply. Every nuclear reactor begins with uranium, but global uranium supply hasn't kept up with demand. Production dropped nearly 30% since 2016, and prices have surged more than 50% in 2025 alone. Key players include Cameco, CCJ, the world's largest publicly traded uranium producer; Uranium Energy Corp., UEC, an American-based miner benefiting from U.S. energy independence policies; Energy Fuels, UEO, also focusing on rare earth elements for clean tech. These miners are the foundation of the nuclear value chain, and their margins expand dramatically when uranium prices rise. Tier 2. Fuel enrichment and fabrication. Once uranium is mined, it must be enriched into usable nuclear fuel. This is where Centrus Energy, LEU, dominates. It's currently the only U.S. producer of HALEU, or high-assay low-enriched uranium, the critical fuel for next-generation reactors. Another key name is BWX Technologies, BWXT, which builds nuclear components for both the U.S. Navy and commercial applications. It's also one of the few companies with advanced fuel technology contracts. These 2 companies represent the bottleneck of nuclear energy, and bottlenecks are where profit margins thrive. Tier 3. Reactor builders and innovators. Now comes the technology that's redefining the entire sector: small modular reactors, or SMRs. These reactors are smaller, safer, and faster to build than traditional nuclear plants. 2 companies lead the way here: NuScale Power, SMR, which recently received U.S. government certification for its reactor design, the first of its kind. Oklo, backed by OpenAI's Sam Altman, is building microreactors that can power data centers directly, without relying on the grid. These startups are reshaping what nuclear energy can do, turning 15-year megaprojects into 3-year deployable solutions. Tier 4. Utilities and operators. Finally, we have the power companies that run these nuclear facilities and deliver electricity to the grid. Traditional energy giants like Duke Energy, DUK, and Dominion Energy, D, already operate large nuclear fleets and are now exploring SMR partnerships with cloud providers like Amazon Web Services. These companies offer stability, regular dividends, and steady growth, while providing the infrastructure for the nuclear resurgence. Together, these four tiers form the foundation of the AI energy ecosystem, and every layer feeds the next. Coal and gas are falling out of favor due to emissions. That leaves one solution: nuclear power, the only zero-carbon, high-output energy source that runs day and night. Part 4. The opportunity ahead. If nuclear captures even 30% of AI's future energy demand, it could unlock a $90 billion market by 2035. That's equivalent to doubling the current size of the global nuclear industry. The winners will be those positioned at multiple points in the stack, from uranium extraction to on-site AI power generation. Investors who recognize this early may benefit not just from company growth, but from a structural shift in how our entire energy system works. Conclusion: AI is reshaping the world faster than ever before. But its success depends on one thing: power. And as the world races to keep up, nuclear energy is emerging as the clear, scalable solution. If you're watching the AI revolution, don't just look at the chips, look at the power behind them. Because in the next decade, nuclear could be the real 10x story. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights. Got questions? Feel free to reach out. We'd be happy to help.